I've got a minute and a half for you, Mr. Oliver Slope, Blue Line Futures, Chicago. Have at it.
Well, a lot of the excitement in the grain markets was really in the overnight trade. We saw a nice move to the upside, specifically in that corn market. But once the 8:30 open happened, we saw some sellers step in. And it's the third consecutive failure for the May corn near that 518 level. So I wouldn't be surprised to see the market maybe pull back a little bit into the weekend. The momentum to the upside is slowing. Now, I'm still halfway optimistic that we can continue to mark higher lows and higher highs, but we're running out of buyers up here. And with March options expiration tomorrow, I wouldn't be surprised to see things maybe peter out and just catch their breath a little bit. Looking at that May corn again, the retracement to trend line support in the 20-day moving average, that would be a pullback to 5 to 503, so about a dime lower than where we're at now. So long as we can defend that, I think the path of least resistance is higher. However, a break and close below that support pocket, and things could get a little bit interesting, especially with funds holding a rather net long position in that market. And then over on the wheat side, being a little bit more optimistic. This is the third day this week testing the 20-day moving average at 1063. That's going to be the hurdle the bulls want to get out above next week to really get this market moving back to the upside.
Super content. You nailed it, man. Thank you. Perfect timing. We're going to go away. Stay right there. We're going to pay some bills. We're going to come back and talk more with Oliver Slope, Blue Line Futures. He's in Chicago. Let's bring him back in. Another 90 seconds for Mr. Oliver Slope, Blue Line Futures. See if we can nail this one.
Well, the tone has certainly shifted here over the last 3-4 weeks in the livestock markets. Obviously, to end last year and to start this year, they were red hot really across the board, live cattle, feeder cattle, and lean hogs. So we've started to see some retracement, some long liquidation in these markets, which was a concern when you had funds record net long at all those three markets, live cattle, feeder cattle, and lean hogs. So we're seeing a little bit of a pullback here today. For that April live cattle contract, though, we're coming into a little bit of a support pocket near 193. That was the top end of the range from last spring, summer, and fall. And then the breakout point in December of 2024. So previous resistance is now going to be support. That's going to be a must-hold area. With cash trading above the futures board, I would imagine that tries to hold. However, a break and close below there, and you probably see additional long liquidation push the market another $4 or $5 lower. Feeder cattle, on the other hand, they've been holding up a little bit better than the live cattle market over the last several weeks, which I think leaves a little bit more downside on that end. We're looking at a head and shoulders formation, and that April contract it comes in near 270, which is also near the 20-day moving average. I think the bears are in the driver's seat until the market's able to close back above that level.
You did it again. I don't know. You're in the wrong business, man. That's perfect timing again. Thank you very much. Super content as usual. Oliver Slope, Blue Line Futures. He's in Chicago, where I think it's a little cold, but we're in Nashville, where it's not too bad.